They got me, y'all. And I knew they was gonna get me, but I didn't know they was gonna get me this hard. It's only been 6 months in this and my mortgage is going up $700.
Lord have mercy.
I knew it was gonna be crazy because the previous owners, like the people who bought it to renovate it, they were only paying land value, even though the house had been on the market with this current rate and a current county appraisal for X amount of months. But I don't know, somehow they only were paying land value. And then I lost my ID twice. It took them 3 months to send me an ID right before the election. So I wasn't able to file my homestead exemption. And my escrow now has an overage of the amount that I owe in taxes, which is going to put my payment up $700. And I don't want this to discourage you from purchasing a home. It's just something to keep in mind. And I also knew this when buying because my loan officer said that there was no real way for them to get an accurate, which I mean, he kind of told me that it was going to go up and it may have went up drastically. The way that they were doing it this year was so that I wouldn't feel the effects, but I would have rather been paying how much I was supposed to be paying all along rather than have such a huge shortage.
Yeah.
And he was even confused when looking at how much they were paying in taxes because they hadn't even updated to what the home value is now. They were like paying maybe $2,000 in taxes a year for the home that I'm in. And that wasn't with homestead exemption. So I'm not sure how I ended up so much in the hole. They got me, y'all.
And I've dealt with something very similar to this, but definitely not no $700. Mine was like a couple of $100. I seen the change. And first thing I did was I called up the mortgage company. I was like, what's going on? There's gotta be a mistake, y'all. And just to be totally honest with you all, when you're a first-time home buyer, a lot of times you're looking at the actual agreement that you all have drawn up as far as like the fixed interest rate and all of that. And then you're looking at your mortgage payment and you're like, oh, this is how much it's going to be every month, right? And I didn't even know that every year it has a possibility of going up. Luckily for me, I would see it creep up about $50, maybe $100 or so. And then I would start asking like, hey, why does that happen? So one of the things you can do is get an escrow analysis. Now, this will give you a better understanding of why everything is the price it is, because things can happen to where there are mistakes and errors. And I know a lot of people have ran escrow analysis and then they figured out, hey, something was input wrong. Anything can happen, right? Another thing you have to consider is the appraisal value of the home. Essentially what happens is they start saying, hey, this is how much we think the house is worth. And based off of how much the house is worth, that's how much taxes you're going to end up having to pay, a certain amount of taxes based off of how much the appraiser is saying that the house is worth. So in a lot of cases, we see people's houses go from being like very cheap to being extremely expensive. Say you bought a house for $200,000, but now the appraiser is saying that your house is worth $400,000. Well, before, even though you have a fixed interest rate and you were paying taxes on $200,000 house, if they say your house is worth $400,000, you are now going to pay taxes on a $400,000 house, not a $200,000 house. That doesn't mean that you didn't get a fixed interest rate. Your interest rate, if you did get a fixed interest rate, which I think is the best thing to do, is not going to be the reason why your mortgage is fluctuating. It's going to be because of escrow. It's going to be because of your property taxes. It's going to be because of insurance. Those things can definitely fluctuate year to year. And this was something I didn't know. And that's why I'm telling you. So what also ends up happening is if you end up building on a new build construction, usually you just have nothing but dirt, especially if you're building in a new community. And unfortunately for some people, especially first-time home buyers, if you are building in a new build community and the lender or the realtor is not being honest to you about the fact that that payment that you're seeing right now is probably not going to be that for a long time, once they start building up that community, you're not going to have the same amount of taxes as you did when it was just nothing but dirt there. Now there's a whole community that they have now assessed, and they're going to send the appraiser out and they're going to say, hey, we got these houses around here. They got comps. They got these stores. All this stuff is built up. And then that ends up changing the value of the house. It's not going to be the same as when there was nothing but dirt and rocks. So a lot of people end up being surprised because they weren't expecting to pay the prices they were paying because now they're being assessed at a higher rate. And this is why it's very important to get a realtor or work with people who are going to be upfront and honest about what exactly is going to go on. Now, unfortunately, I just need to add this because I think a lot of people are like this, You may be looking for somebody to tell you what you want to hear when it comes to you getting into a home. You don't want to hear the harsh truth about what it may be because you may want that home so bad. When we was looking for a realtor for our first home, I didn't want nobody that was going to just give me fluff and just tell me whatever I want to hear. I want somebody that's going to be straightforward with me and honest. There are realtors and there are lenders out there that will tell you whatever you want to hear just to get you in there because they're going to get paid a commission. But at the end of the day, these are the things that you're going to want to know, because being a homeowner, there are going to be certain expenses that you just may not even know are going to be expenses unless you're working with somebody or you got family or somebody that actually has homes and things like that can give you the game. But what you don't want to do is just walk into this in the dark, because a lot of people end up penny pinching what they think they can afford as the mortgage, not understanding that over the course of a few years, it can drastically change. And it's not because you didn't get a good interest rate. Interest rates are also a big reason why a lot of people can't get homes. But then when your stuff starts fluctuating because your home is being assessed for more than what it was when you first got it, or now there's a lot of natural disasters or things like that are causing your home insurance to go up, you might have not factored that in, which is why I also don't think it's the best idea to get as much house as you can just because you can currently afford it right now. Because if they assess your house at twice the value, which I've seen that happening in Florida, oh my goodness. A lot of the senior community in Florida, they were just getting wiped out of their houses because when their homes were being assessed for way more than what they were used to paying for over the course of like 30 years or so, because you still have to pay taxes on your home even after you own it. Because they were on fixed incomes, they couldn't keep up with even the escrow, your home insurance. And if you can't pay your taxes on the house, that's going to be a problem because Uncle Sam wants their money for the taxes on the house, whether it's paid off or not. You got to pay that every year, and they really don't care nothing about the fact that you might have a fixed income.
Guys, tell me why my mortgage went from, don't judge me here, $3,200 a month to $5,600 a month. Backstory here is I was looking for a house back in 2022 and I put in offers on multiple homes. So we decided to they got declined and they wanted 50 to 60 grand over asking price for the home with no contingencies and all that kind of stuff. Long story short, I'm actually selling that home right now. Bought a mortgage with Ryan Homes, and I am the last house that's built on this subdivision, the absolute last house. When I signed on the dotted line, my mortgage was 32 and some change. And I was fine with that because that's what I expected, the size of the home, X, Y, Z, yada, yada, yada.
Right.
Come to find out that, again, I had a realtor during this time, but with new construction, Ryan Homes doesn't pay the realtor a commission. So I was like, well, okay, I'm not going to ask him to come in and do any kind of work because he's not going to get compensated for it. So I let him know what I was doing, and then ended up being no realtor. So anyway, next thing I know, I get the first tax bill on the property with land, with the home build.
Right.
The taxes were $16,000. $16,000. So that, not the half of it. So I then go call, like, hey, is this right? Is this correct? Like, yeah, that's your correct property taxes. We're not sure why, but Ryan Holmes did your estimate based off what your taxes could be on the home because you're the last home built. So there's plenty of comps in the area.
The disrespect, and this is why I was talking about earlier, when they say comps, essentially that's saying the comparables. That's the other houses on the block. That's the house on the same street. What they will do is look at how much that house is worth. And based off of those houses, they could have gave him an estimate of how much his taxes were going to be because they're already homes built. And even though that was in a new build community, he already had comps in his area. And another really interesting part of the story is he's essentially talking about how when he went to the new construction home with no realtor, and it seemed like Ryan Home, as far as how he's explaining it, didn't want a realtor to come in there with him. And the reason I'm bringing that up is because that is a big red flag. I had the same exact thing happen to me. I was looking at a home, and at the time, the market was like really, really good. And that was when the builders were making all sorts of demands and stuff like that. And so because of that, they didn't want to pay commission fees, essentially because, in my opinion, they were trying to cut out the realtor so they could pocket the money. Because if you have to pay a realtor fee to the people, aka the realtors, if the realtors are bringing you in clientele, they should get paid a fee, right? But they didn't want to pay the fee to the realtor. Instead, they were just like, oh, it's fine. We'll take care of everything. big red flag. If anybody starts using that sort of language and they are a builder and homes is not your expertise, run, run, run. The realtor is working for you, working with you, working for your best interest. It would be naive to think that the person showing you a home, trying to get you in the home, hooking you up with a lender from that same company, that they are working in your best interest. They are going to do what is best for their organization, for their company, to keep the most dollars in their pocket and to do what's profitable for them, which is why I always would advise anybody to get a realtor. Unless you're already a realtor, then you probably won't need a realtor. And his experience further backs up my statement because, as you can see, they didn't educate him on what was really going to happen as far as his taxes and the fact that he wasn't assessed with the actual build on the property. And in my opinion, that may have not happened because that might have had an effect on whether he would have continued with the build or not. And if he had a realtor, perhaps, and not just any realtor, a good realtor that wasn't just going to tell him whatever he wanted to hear, perhaps that would have been brought up in conversation. And additionally, a lot of the lenders usually give this information out also.
However, they use taxes off the land because it's going to show you a cheaper mortgage.
Yeah.
Okay. So I'm like, okay, so what do you have to do? Well, you got to pay them so your property taxes go up. Okay. The next part of this is that being that my property taxes will be this, and being that the property taxes were underestimated for that year of 2023, I believe it was. Now my escrow account is negative $11,000.
Lord have mercy. Oh, so now he got to pay more money. Or you're short on the taxes. And in his case, property tax.
My escrow account is negative $11,000 because Ryan Homes only used property taxes on the land. So now I not only have to get my current property taxes updated into my mortgage. Now I have the rears back taxes in my mortgage. People, when I tell you, I almost lost my shit. I did lose my shit. I'm not gonna lie. I lost my shit. I completely lost my shit because this is something they don't tell you about new construction.
Yeah.
And people will say, oh, you should have had your realtor, you should have had your attorney. And that, I guess I take the hit on that because I'm thinking I'm not going to use my realtor who I've been using to show me these houses because Ryan Homes, they don't pay a commission off the sale. So I'm like, man, that's not right. I'm not going to use my realtor to come in and do free work. I'm going to have to pay out of pocket for my realtor. And then So
Agreed.
Mortgage went from $3,200 to $5,600 a month.
Sick.
And I'm like, yo, this can't be right. So now I'm looking up property taxes in Libertyville and Vernon Hills on houses that are places, nicer areas than this. This is Antioch, Illinois. No knock against Antioch, but it's not Libertyville. It's not Vernon Hills. It's nothing. There's no restaurants. I mean, there is a few, but it's not built out like that. The infrastructure isn't in place like those places is. And I'm just kind of like, So long story short, fast forward, unfortunately, the home that I thought I was going to be in for 7-10 years that my kids would grow up in, I'm selling. I'm selling that home.
And this is what ends up happening. How I was kind of describing what happened to the senior citizens over in Florida. And this happens a lot of times. The escrow payment, in addition to the fixed interest that you already expecting to pay for your mortgage, just sometimes it's out of people's reach. He thought he was just going to be paying $3,200 and ends up paying $5,600. For a lot of people, that can really become too much. And if you don't make enough money, you only have so many options. And I know a lot of people want to be homeowners, and this is why this sort of conversation is very important to have. And it is really unfortunate that he ended up having to experience this himself and learning this sort of information this way. But this does shed light to the realities of being a homeowner that a lot of people don't understand. They just are like, oh, you own the home and blah, blah. There is a lot of expenses that come with home ownership that a lot of people just are unaware of. I too was one of those people, but I luckily didn't have a big jump like this. Like this would have been a lot.
Because I can't afford it. And I refuse to be house poor, paying for a house that I'm just trying to keep up with. There's no way possible I'm going to, and then let me say this too, is that the mortgage will end up being, even if I didn't have the taxes in the rear escrow account, the mortgage will still end up being like $4,000 something a month, right? Because my principal and interest is like $27. The property tax was like another $13 something. So it's like $4,100 a month. No. Absolutely not. I refuse to pay $4,100 on a house.
Yeah.
Property taxes that amount, and you don't have anything to go off of. If you are thinking going with any new construction, any new development, specifically Ryan Homes, make sure that you look on that paper and it doesn't say, when it says taxes, make sure you ask them, is this property on the house after it's built what it could be or before? Because if you see something that's like $2,000 or $3,000, property taxes, make sure you ask them, hey, is this on before the house is built or after the house is built? Because they can estimate what the taxes are going to be based off what they sold you the house for.
Yeah.
They can do that. So will they? Probably not. But
and you know why he said they might not do that is because it might hinder some people from signing on the dotted line, from going on with the construction of the new home. And having a good realtor there, hopefully they would have told him that.
Again, Ryan Homes, you screwed me. You have over my life, and this has set me back tremendously. I did a lot of hard work to build my credit, save money for a home, and I just gave it away because it's crazy. There should be something in the laws that says new construction builders should have to show you property taxes on what the home value, what your property taxes are going to be, because that would change everything. That would change your mortgage. That would change everything.
Yeah.
And I would have told them, no, I'm good. I'm not.
See, and that's what I was saying. Exactly and I've never seen this video that would deter people from buying the home in the first place because you would know it's out of reach. And it's very sad. Can you imagine trying to build your credit, saving up, essentially thinking this is going to be your dream home, just to, within a few years, have to turn it back over because of a lack of education, because of one small but very important bit of details that, you just don't know till you know type of thing.
So I'm going to keep looking, but it is what it is. Looking for a new home. Here's to chapter 2, starting all over again.
I mean, I really wish him the best because that's very sad. Like, who wants to see somebody get their home essentially taken away from them due to a situation like this? Is extremely sad.
I can pack up the house and give it back to you. You can have it. If you own a newly constructed home or you're buying a newly constructed home, stay here. So tell me how I signed a document with all the documents signed, your payment 1907. And you sign 1 million documents.
Yeah.
Now, a year later, they hit me up in February talking about your payment is $34.50. I bet it ain't. I bet it's not. So the first year when you buy your home, your newly constructed home, they're only charging you for the taxes, the property taxes on the land, the raw land. Well, the land was only worth $60,000. Well, now that the house has been put on it and now there's a development around you, that land this year is worth $110,000 and they put a 400 and something, almost $500,000 house on top. So now your taxes are going to go to correct. So now your mortgage is going to increase. Now, when they done tell you got a fixed rate, you got a fixed payment and all, they not explaining to you that the property taxes will increase that payment. My payment went up to $34.50. How? Because I can pack up the house and give it back to you. You can have it.
Yeah.
So they send a little letter. I called because with this letter, don't send no letter when you talking about my money.
Yeah.
I called a lady. The lady basically telling me, yeah, somebody should have told you that. They didn't tell me, ma'am. And that's another thing. Your realtors, some realtors, they gonna comment. I tell my clients that was your realtor's fault. That was your okay, but we not here for that. I'm here for the people that if y'all have experienced this or if y'all about to experience this because it's y'all first house in y'all newly constructed home. The taxes is not right. Pay extra. Extra. Let me tell you how crazy it was because when I signed the paperwork, they said your payment, my loan originator was like, your payment gonna be $24.07. But when we got to the paperwork, it was $19.07. So then I said, hey, it's supposed to be 24. You said, he said, no, don't even worry about it. That I always overbid. So, when you get here, I can give you good news. And I'm over here giving him brownie points, sending him edible arrangements and shit. And nigga, you knew it was supposed to be $2,400 because the taxes, you didn't say that. So now I'm paying $19.07. Happy as hell paying $19.07. And
he knew? Oh, no, that made it even worse. And he sent him the edible arrangement thinking he was hooking him up. What? That's crazy. The disrespect. Ooh, you sly fox.
And then the next year come in and I got to pay because the escrow didn't have no money. They done paid the taxes for me. Sir, lender, I didn't ask you to pay the tax. Don't pay the taxes on my behalf. You better call me and tell me my escrow was low.
Yeah.
So they done paid the taxes. Now they talking about I owe them $34.50 a month for the next 3 years. Or I can come out of my pocket 17, 18. We is in We is struggling.
Look, it is so funny because this is kind of similar to what happened to me. I seen the payment jump up. I was like, why is it up? They was like, oh, we needed to take a little bit out because, it wasn't enough in the escrow. And when you see that mortgage payment jump up, you like, what's going on? Like, what is this? They're like, oh, this is just for the first couple of months, and blah, blah. I was like, and every year since, I've been on they bumper. And he's not lying because I didn't receive no phone call. And I don't even think I got a piece of mail. But what I did see was that mortgage payment, when it hit my account, wasn't what it usually is. And I said, something got to be wrong. They take the money and ask questions later.
The county, the city, the states, America is down.
No, I have a fixed mortgage. I got a fixed mortgage when I bought this house 6.5 years ago.
So it says here on the screen, your house payment went up because you didn't get a fixed mortgage. You didn't think before taking out your loan. That you could know. And I know that's not the case because I got a fixed mortgage and my stuff still went up. I'd be scared to get anything but a fixed mortgage. But I was under the assumption because I was younger that having a fixed mortgage means that nothing would ever change as far as the mortgage payment because I didn't understand escrow. I didn't understand how the property taxes would work and how the insurance on the home would affect my mortgage payment. Because for those of y'all that don't know, when you pay your mortgage, it's essentially one payment. We aren't paying homeowners insurance separate and we're not paying the taxes separate. Now, I know some people have it set up that way, but this is why people are saying their mortgage payments are going up and it's not because of a fixed interest rate. So just think about it like this. If you didn't have an escrow account set up, you would be directly paying your homeowner's insurance to whoever it is you got homeowner's insurance with. Or you would also be directly paying your property taxes every year. Whenever you get your little slip in the mail to say how much your property taxes is, you would directly pay that. When you have an escrow account set up, they are essentially estimating how much that's going to be for the year, and they're tacking that on to your mortgage payment, which is why it could fluctuate. Most people have a car, so I'm going to use this as an example. Think about your car insurance. That fluctuates every year. And just like that fluctuates every year, so does homeowners insurance. Sometimes it stays around the same, but sometimes it just kind of goes through the roof. That's what's essentially happening to people who have to pay their mortgage and they're talking about their escrow went up because the home insurance went up, because the property taxes went up. So does the mortgage.
My principal and my interest have not gone up. However, my taxes have.
Yeah.
My taxes have gone up massively in the last few years due to, I'm not sure, county greed, appreciation on my land. I have made no improvements to my house. I do not think my house is worth what my county is assessing it at. But yeah, no, my taxes have gone up enough to screw over my mortgage, but not because I didn't get a fixed rate mortgage. Yeah, I'm smart enough to do that. This was something, again, I couldn't have foreseen. I did not expect house prices to go up by that much, and then therefore taxes. Like over the course of a 30-year mortgage, yes, I expect that house prices would go up. Again, that was foreseeable. What no one foresaw was in the last 4 years, house prices like doubling.
Yeah.
Nobody saw that coming.
And I feel her completely. And I was just thinking about how this is kind of like a good thing and a bad thing, depending on what situation you're in or if you're trying to keep your home and if you are ready for this sort of thing. But imagine you buying a house for like $200,000 and then they assess your house and they say it's worth like $500,000. The tax difference on that would be crazy. And I guess it's good if they're saying the value of your house is allegedly like double the price of what it was when you bought it. But let's just say 4 years ago, who would have thought in 4 years it would just double like that, And now because you ain't going nowhere, now your taxes are just through the roof. Now I'm curious to know, have any of you experienced your mortgage payment go up because of, a lack of escrow or the fact that your property taxes increase or they have now assessed your house at a higher value or just because your insurance is through the roof now? Comment down below, let me know. But we have to start making better decisions today in order to have a better future.